Okay, let's jump into it. Bit of a recap of somewhat a pretty boring week, actually, to tell the truth. There was a couple of sort of little run attempts on things, but it seems to be the theme of the year so far that it's just sideways grind. I mean, they'll start off with DXY. Actually, before we do that, we will sort of jump onto a bit of a news because it's got quite a big week sort of coming up with the news. We've got not much happening on the Monday, as you can see, and then we've got retail sales tip to drop off a little bit. You can see here from last print. Last print was 2% and expected to come in at a minus 1.9%. I don't think this will happen because I mean we've got sort of Christmas period and all that kind of stuff. So are we going to see such a big drop off in that period there? I don't know. I would say probably not, but I mean this is obviously what they've sort of predicted for it. So excuse me, we'll sort of see that sort of 11:30 on the Tuesday, sort of local time. And then we just hammer this week with the data coming out because we got the jolts coming out on sort of Wednesday morning, and then we're followed by sort of Aussie CPI on the Wednesday, and this is going to be quite a big one. I mean, look at the size of these drop-offs. So if you look at the previous prints with this, we are just sort of churning down these levels here. So I might be able to get a better view if we just hit this on here. Yeah. So if you can see the last couple of prints that we've gone through, 5.6 down to 5.2, down to 4.9, down to 4.4. Like they are some chunky drops each time, and it seems obviously sort of accelerating a little bit. So if we get 3.7% on Wednesday, I would say Aussie is going to get a pretty heavy hit on this because the only thing that's really half holding it in the game is the fact that obviously DXY or US dollar broad sense isn't sort of really breaking out. But it's really been coming down quite hard, and obviously. While all these other sort of big banks are sort of talking about, the cuts and all this kind of stuff, when are they going to come? There is still part of the conversation with the RBA to sort of say that we may have another rate hike in us. So if we get a high print, or if we get some sort of sticky number around this previous number of 4.3, or I would say even probably above sort of what they've already priced in at 3.7. If we get something above 3.7, say around the 4%, I mean, it's still a drop off, but it's obviously not as much as expected. I think that's the only thing that's going to sort of save the Aussie at the moment because it's really just been absolutely hammered into every time it's tried to rally, which we'll see in a few minutes in that when I jump onto the charts. But yeah, that's going to be a big one for the Aussie sort of come sort of Wednesday morning. Soon after that, we got manufacturing PMI, we got China. Obviously, sort of as you can see, PMIs last week were all pretty much sort of around the globe. They all seem to be sort of ticking up somewhat. I mean, US obviously beat quite strongly. Aussie beat quite strongly. Actually, not so quite strong, but they did get up above 50 for the first time in about a year. And then sort of a lot of Europe data was a bit mixed bag, sort of like, services, which is the non-manufacturing here with China, and then sort of manufacturing. They were sort of like, one up, one down kind of thing. So it wasn't really sort of a straight shot, but it all seems to be somewhat not just like, the first thing before it turns around is to at least stop falling and decreasing and sort of contracting. So that'll be an interesting one, but sort of China pushing through here, coming in just after Aussie as well. So depending on how Aussie sort of comes out with it all, if we see a big impact of the move there, this could also be somewhat mitigated a little bit with this data from China sort of coming just after it. And then sort of pushing on, I mean, there's no break through the rest of the week, so it's probably better to have a bit of a quiet sort of Monday. But after that, we got ADP, sort of like, Wednesday night, Thursday morning kind of thing coming on there. And then sort of the same night, we got FOMC, which is obviously there's just the big one. And that's really going to be the one that I think sort of people are going to be looking for. Not so much the rate decision because as I said, pretty much the same with the ECB. Like, what I mean, raising rates is off the table. That's fine. Everybody knows this. Cutting rates is the talk of the town. But, even if they were to be coming, not in, Feb isn't really on the tables at all. So, yeah, I mean, what do we expect? It's going to come in at 5.5%. Like, it's not going anywhere. So March is really the one that they're sort of talking about if they are going to cut early or earlier, that is when it's going to come. So obviously that's not really part of the conversation now. So the statement I think is really what people are going to be looking for, and I think like most of the ones recently, this is the big one that'll really sort of send things around. Oh, sorry, not the statement, the press conference at 6:30. I think that's really going to sort of send things flying up and down and that. And then moving on after that, we've got a bit more sort of China data coming out that day, and then Friday. No, sorry, it was still on Thursday here. We've got England so coming out, the BOE, with their sort of rate decisions as well. So this is going to be an absolute massive action-packed week, and then finally finishing off Friday, ISM manufacturing PMIs. So this is going to be an absolutely huge amount of data sort of coming through the week, and then you sort of and we've got non-farm on Friday as well. Cheers, well, sort of technically Saturday morning local time, but Friday night. So this is going to be an absolute action-packed week. So no wonder really nothing's moving at the moment. So I'll start off with DXY because this is the one that's really sort of driving everything at the moment. It looks like it's it's not doing anything, it's going sideways, but it looks like the failure to move forward might sort of have been happy for people to sell it back into it, but it sort of keeps getting bought up there. And this is the same sort of thing we saw through this zone here. We had a big sort of box, this consolidation area, the sort of breakout box here. That's really so what we were waiting to come through. Obviously, we got that gap up, pushed out here, came back. We had that little retest earlier this week of the top side of this sort of breakout box, and as you can see, bang, boop, straight back up into it. Had a little bit of news out on sort of Friday, which I thought might have been enough to sort of really drive it, but obviously, as you can see, sold down sort of into the last couple of hours, but then it just pushed up again into the last couple of hours. But like I say, most weeks and the last couple of weeks, you can't really put too much weight on with sort of like what's happening with the charts because the volumes dry up and things just go all over the place. But as you can see, we had the consolidation through there. We leveled up, and now we're just into the next consolidation. So really the question is this week, where do we go from here? And obviously, as I just said, there's so much data coming out. We're either sort of going to level up, and we could probably see something similar to this, which is just that next step up along through here. So again, like I'm not sort of Elliott wave sort of person, but I guess this, even though these have been sideways hustles, so you could say one leg, two legs, three legs, four legs, fifth leg. So we could be sort of coming up because we've got this sort of area, the 104 to 104.50 that we've been sort of like picking out for a while. This could be that last little step up here before we start to see it be sold into a little bit more. But as I said, with so much news coming out this week, it's pretty hard to sort of say, what's going to be happening. And I guess this is really the reason that every time we thought it's been selling down, it broke through this sort of rising support coming through, and we can see it just got straight bought back up into. So start to clean this up a little bit so you can keep an eye on it a little bit more. So really, still same two lines that I'm kind of looking for at the moment, which we've got them sort of marked up down here and down here. Yes, we've got our sort of little consolidation box, but as I've said a number of times with things, we pop out the top side, we pop out the bottom side, just a bit of that counter swing, and we're back into it here. So really, again, the breakout of either side of this sort of consolidation area, it got really sort of sold back into, bought back into, and I think they're the nice sort of lines that we can take to sort of say, are we sort of going to break what's going to be a bit more of a sustainable break one way or the other. But certainly for now, we're not really sort of, it's not giving much away. And as I said, again, with so much news coming out this week, particularly being the FOMC and the NFP, I think those are going to be the massive drivers for DXY this week. It does look like it's somewhat sort of weakening coming through here. Maybe if we can get a little bit more if it's sort of coming onto the daily. But as you can see, it's just wicks both sides in that previous one, wicks both sides on this one as well. The RSI has cooled off a little bit, but it does look like it's almost ready to try and sort of push up for another little leg here. So I think sort of, Monday, Tuesday might sort of see a little bit more sort of cooling because I just don't think we're going to get the necessary break to the top side before these larger bits of data, at least the FOMC. So I think sort of like this is really going to be the part that we're going to be playing through till we get that FOMC sort of coming out. But certainly at the moment, it's looking like, get rid of these ones as well. It's looking like it's a bit of more of a sort of wait and see action. Okay, flip across to the Aussie because Aussie is just unable to sort of catch a break really. So we'll pop it onto this Aussie chart here. So this was what we were looking at sort of coming into the end of the week. The potential of this sort of breakout of this larger sort of falling resistance that we've been respecting since the start of the year. So we've touched it up a couple of times. We got a little breakout here, but obviously just as quickly smack back on the nose. And as I said, with CPI predicted to come in at sort of 3.7% this week, that's definitely going to be sort of worrying, sort of basically Aussie longs. And as I said, like I'm Aussie long at the moment, so I'm certainly sort of considering this at the moment. So I might sort of look to sort of lighten up a couple of positions prior to it all. But at the moment, it's certainly any time it tries to get past this level, it's just getting smacked on the head. So let's see if we can clear up a few of these as well. Yeah, a bit of a clearer picture. We can see sort of down the bottom side here, I did have the buy sitting in this lower level here. We can see that, they have pushed up a little bit here, but not enough to sort of say that it's a clear cut level up the top over here. Realistically, we're just looking at the same as on DXY. Almost identical. I mean, you got the consolidation, just swing out the bottom, swung back in, came out the top, back in here. Again, with all this data coming out, I expect probably Aussie to sort of hold up into this top area here, just sort of through the Monday, Tuesday. As I said, it's pretty quiet on the news front. DXY was selling off, but obviously sort of parred a little bit, paired a little bit of its losses and that after that news dropped on Friday night. So possibly could get a little bit of a swing back up, but again, I think it's pretty much just this sort of 50, 60 buck range that we're sort of looking at. We did, as I said, got a little bit of a sort of push out of this falling resistance, but not enough to convince me, obviously with this subsequent smack back down to the bottom side here, that we're actually sort of seeing any change here. I think this could very much just fall into the fact of it's just a failed breakout at this point. If we have a look back, actually, start of this run, maybe it was on the other Aussie chart we had down the bottom here. We could see that sort of like, obviously this was a large sort of little area that we were breaking through. We did have something very similar here, where we sort of like, this was that large sort of falling resistance from all the way down from the 69 period last time. Came right down here, and this was also a little area where we broke out, looked like we were doing okay, smacked right back down, took out the absolute lows of anything else that we had taken, anything we'd put in previously. Almost yearly lows, I think that was, just under 63. And this is where we started to sort of really build a sort of long position. But this could be potentially something reminiscent of what we're seeing here. So jumping back and forward in between the charts, where we've seen a little bit of attempt of a breakout and smack back down to the bottom lows here. At the moment, it's really just a matter of sort of like, can it sort of push through and get above 66.20? There is a little bit more of a sort of a sideways grind. So the buyers are holding a little bit more of a horizontal line than they had here previously. Oh, actually, no, look, I mean, that is a pretty sort of strong horizontal. Obviously, we had the blowout bit down the bottom here. But I think the slight difference here is you had a little bit of a sort of almost falling triangle that we had coming through here. And these buy areas, the buyers weren't, like, the buyers may have been sort of jumping in at an even level down here, but each time they were driving it just a little bit lower, or the sellers were coming in just a little bit harder each time, as you can see coming down here. I mean, if you put it on the wicks, you can see it a little bit more, but that kind of sort of steeper sort of gradient. The difference that we have now is that these pushes are equally met, like with the buyers down the bottom, are equally met with the sellers at the top. We're coming back up into this zone pretty much almost equal every time. So that's a slight bit of difference that we had from that sort of previous sort of consolidation halfway through January. But certainly at the moment, I think it's just in this sort of sideways hustle till we get Aussie CPI happening, FOMC, and then obviously NFP. They're the big ones that we're sort of looking at for the Aussie. Downside moves could be looking back to, to retest these lows, 65.30 if we do break this level here. But we do know that this is a fairly strong support area that we saw on the way up. It was tested a number of times. before it actually exploded up to the top side. We've had one test here. Not to sort of say that the second test can't go through, particularly if we get low CPI and also, they have sort of a talk of sort of like, hey, look, you know what, we're putting the rates off for the Fed, then I think that's maybe the sort of right sort of combination to push Aussie down and break that level. And certainly if we break these lows here at sort of 65.20, as I've said a couple of times, I think it's going to be pretty tough for any of the sort of Aussie positions. So we'd be looking at something along these lines over here. Sort of coming right down at 64, 60s. I think, I mean, obviously there's a couple of areas we'd have to sort of look at closer, so around the sort of 64, 60 area. But certainly I think that would be seeing quite a heavy sort of little drop off. Again, I'm not a sort of Elliott wave person, but this is 1, 2, 3, 4, and so this could be looking for a fifth leg to the downside here. That's if we do get a low print on the CPI, and if we do also get some sort of like sort of push, will sort of push back with the Fed in terms of sort of when they're actually going to do the rates. And they sort of say, look, you know, it's just too soon to sort of say, too soon to move forward on sort of like March, as we sort of promised. So we're going to have to sort of wait and see. That kind of thing, that kind of combination of the sort of fundamental news is going to put Aussie right on its ass and down below that sort of 65 level, I'd say. Alternatively, as I said, if we get a little bit of a higher push, that might be enough to sort of get Aussie coming out the top side here. And if Fed says, look, you know, we're on par and we're really doing well, and we're going to stick to the course and stick to the plan, and say that March is happening for us, that alternatively should open up the door for Aussie to get up back above sort of 66, or at least back up to test 66.50. We're going to have to see, because obviously NFP coming in after that. But so there's a couple of heavy levels of resistance coming up through here. But I think that's the combination that's going to get Aussie breaking to the top side here. But for now, we're really just in this little grind sideways hustle with supports just below it and resistance just above it. So there's not a lot of interest in the Aussie just sort of at the moment. Flick across to gold. Gold had a pretty tough time this week as we had this little rising support coming in. Obviously, the sellers coming down a little bit stiffer here as well, and we saw that bang drop off. It tried to recover a couple of times, and certainly, as I said, with that US news at the end of the week, which bear with me one sec, what was that? Saturday morning. Yeah, that's it, core PCE. Sort of coming in basically in line with sort of forecast. So that was really the sort of one. I guess actually I missed this one, the pending home sales. So this has really sort of beaten expectations here, hasn't it? Wow, that was a big beat. I think I'd sort of clicked off by this time in that, so maybe this was something sort of leading towards the sort of more sort of balancing of that sort of loss from the PCE. Because certainly PCE after that, it flew around a little bit, but it wasn't favouring US dollar strength. And this was around this time here, so as you can see, we saw sort of US dollar sell off. We saw gold attempt to sort of get back up. We've got this mid-range part of this sort of little area that we said, you know, obviously we want to sort of see it get above here and hold. And just was unable to do so. And as a subsequent sort of thing, last couple of hours, you know, it just turned around and sort of balanced itself back out. So 2 o'clock was this out here. So gold was already sort of coming back down, really, and failed to hold that 2020 level. So for now, gold still, you know, it's up, it's down, it's left, it's right. It's just, it's left, it's right. It's not really sort of going too far at the moment. I think still above 2000, we still got something to talk about. But if we want to sort of talk sort of actual sort of gold longs and holds, I think above 2040 is really going to be the area that we need to see. Because as you can see, the sellers are coming in quite strong each time here. And they had an attempt, they had a nice little sort of triangle coming. They could have broken out to the top side, but obviously sort of like, you know, that news, whenever it was on sort of Thursday, really sort of smacked it down. And that was the US PMI. And it just didn't recover. And I mentioned at the time on the daily video with that as well, that it was interesting to see because silver had made it back right up to the top by the Friday, had made itself right back up to the top side over here, and same with copper, and actually sort of gone above where that sort of US PMI data had come out. But gold at the same time was sort of around here. It was just lagging. It was right on the bottom of its move. It was around 13. So 2013, it got a little bit of a push afterwards, as you can see, but you know, obviously, just it's not enough to get it through these levels. And there's so many different zones of sellers and that coming through here. where we can see, I mean, it's marked out every time. So, and we can see the top end sellers here, as I said, coming in a little bit harder each time here. So, you know, it was probably maybe this was a little bit of a tell prior to that sort of US PMI data that we were going to see a little bit of a sell down. So I think certainly next time, if I see that sort of disparity between the two, because I got stopped out on gold on this move, and I think sort of certainly that's something I'm going to be looking closer at next time. If I see the sort of decoupling of, because DXY was getting sold down a little bit through that period. That was just after that. It was the whole day of all the PMI data, and we had quite strong data out of England, and so DXY was getting pretty hammered, and gold obviously moving up a little bit here, but it wasn't an equal move 1-to-1 of its normal sort of ratio um, with DXY. So maybe this was a little bit of a tell. So I think next time if we see these sort of bits of data coming out, we're coming in for another bit of US data, and we see that little decoupling, and we see that sort of like, you know, they're still selling gold, or at least not buying it at the same rate that they're selling the US dollar, and we're not seeing that nice sort of in sync sort of reverse sort of, you know, inverse relationship. I might sort of lighten up my positions a little bit early because I think that was a bit of a tell. So anyway, here and now, so on downside levels, this is where we're looking for. We're looking to hold sort of 2010, then we're looking to hold 2000. Underneath that, I think 1980, this level here, we've got it marked out. If we go way, way back to last year, 1980 was a very strong support and resistance area. So you may have it on this chart or the other. Quite a messy set of charts through here, but you can see it here, how many times this 1980 zone was respected. Once it sort of got up around 2000, and then sort of like, you know, obviously once it broke through, how strong it was to sort of get back above here. We can see that sort of like, you know, after that big sell-off from hitting all-time highs, bang, back into that zone, that 1980s. I mean, yes, it's a couple of dollars either, a couple of bucks either side, but this is the big sort of swing area. So we break 2000. I think this is where we're looking for. We're looking for this sort of 2000. Oh. If we break 2000, I think 1980 is pretty much where we're looking for. So there'll be some shorts, at least if in a short term, to sort of come down to the bottom side here. If we get that push on DXY, I still think we've got, so I think this is going to hold. I think we are going to go up, back up along this area to sort of 2050. As I said, maybe it comes back down to 1980 first. I don't think we're going to be breaking 1980 straight away. As I said, we had one little touch here and then shot back up over $100. So I'd say that the buying power is certainly here. It's worth at least a bounce through this area if it does come down into it. So I'll be sort of jumping on some longs if we get to 1980. But I think sort of honestly, I think it'll hold the 2000. I think we'll probably come back up and hit 2050 before we hit 2000. Or at least, sorry, I should say before we break 2000. But there is always the potential to come back down, touches, and then move back up there. So we do have a little bit of a sort of rising support coming through here. Not big fan of this one, but you know, if this can sort of hold somewhat, as I said, this is the kind of up to the top side here that I'm sort of looking for to have a bit of a sort of triangle through this period here. Where we go. Starting to get pretty messy on this chart, so I have to clean it up a little bit soon. I think still a little bit of bouncing to come. I don't think we're going to be sort of breaking back up to all-time highs or anything, but I think it's definitely worth us at least an attempt back up towards above. You know, obviously, if we need to go through these levels first, but as you can see here, above that 40 level, which as I just mentioned before, I think the big test then is coming 55, and then the next test after that 77. So a little bit of work for it to do at the moment, but yeah, I still think you know, US dollar is going to be selling off, and I think gold's going to sort of, and metals as a whole is going to benefit a little bit from this moving forward in the next month or two. Okay, flip across, we got copper. Copper, as you can see, I tipped us to sort of push a little bit higher here, and it at the moment is just wicked to wicked to wicked. So, you know, for the time being, we can take these ones off over here. We are in potential of, as I said, one of those sort of outcomes there was to sort of say if this did turn into a little bit of a head and shoulders, Again, I would have liked this shoulder still to come up a little bit higher if we are sort of pushing through there, but I think that we could potentially be seeing, let's just fix this one up a bit. I think we could potentially be seeing sort of some reaction, as we can see, pretty much as it came in here, hit the bottom side and bounce back up. So this is the zone that I've sort of marked out for where I thought, buyers could be sort of sitting based on, it being a bit of a support area previously here, a bit of a support, sort of resistance area. Obviously, these big wicks and big turning points going back to sort of September last year, but so we're selling it down. I think that's worth at least a little attempt in that to sort of hold this to for buyers to have another go. I still sort of maintain that we'll probably come up to this 394 area before we do sell down, if we do sell down with it all. But at the moment, obviously, that's looking a little bit bearish. We're sort of starting to roll a little bit. We've still got a little bit in us for the stotch, though. So I don't think it's about to sort of like melt completely back down. But with all the news coming out this week, it's, technicals are great and you can read what's happening sort of day to day, week to week with sort of, buyers and sellers, the to and the fro. But, that's only just based on sort of what people speculate will be happening with the big guys, with the main rate decisions and everything that happens and, policies and this kind of stuff. So once those things actually come out, well, that is what changes the landscape. And you got to let the technicals settle after that. So then you can see, okay, well, how is the market valuing whatever instrument it is after you've had that bit of news and bit of data come to light. And you'll see it sort of fly around, up, down, all over, and it'll settle. And then you can start to get a read on, okay, the guys that are buying this, the guys that are selling this is where they are. This is where they're sitting. This is where they're targeting. And that's when you can sort of start to attack through the next sort of period. But the here and now, till we get those sort of bits of data coming out, I think we're probably sort of just going to sit in this little top end range up the top over here. And as I said, I still think that we'll probably have a little bit more upside just to at least sort of touch up this 394 area. Finish off with China, because China, as we saw, came back down here, buyers step back in, as we've seen previously here, and quite a bounce actually. I thought, particularly with this large wick coming down here, I thought, here we go, we're going to come down. It was worth it, sort of touch up at the bottom here. But for now, we are sort of, that's quite a deep sort of pullback, because as you can see, this is where I sort of called our little consolidation box. We got the breakout, which was a fake. Obviously, sort of came back into it. It held where it needed to hold, and has sort of pushed off. But again, it's finding resistance back where it was previously, where we've got it marked out, where we had the sort of the top of this sort of little sell area here. So let's just put this in here because we know resistance there. We can see this is where the sellers were. This was our breakout level. It tried again, it failed, came back in, got hammered back down, and now it's sort of got the bounce up. And really, this is the tell. If it can get back outside again, well, this could just be a really deep pullback to sort of fire on. And again, we've got so much news, particularly USD news coming out this week. I think that'll impact it a lot. But this large move coming back down here, as far as I'm pretty much concerned, is just based on all the speculation that the PBOC, I think, are going to be sort of potentially dumping 280 billion into the market. There was some data coming out with China, or sort of news coming out with China over the weekend as well. I think sort of limiting sort of short selling of the sort of A-grade stocks as well. So again, they're trying to do everything they can to try and really pump themselves up. So the more that we have that kind of China stocks recovering a little bit, we have sort of PBOC sort of stepping in, and we know that they do intervene. We saw how strong they were. Where was it? I think up the top over here. This was the PBOC when they stepped in and really sort of hammered it down. So we know they're happy to sort of step in and really sort of play with the market a little bit. So I think sort of, realistically, we're back in this box. I'm calling this a failed breakout, but, things can change. And if we get a close back outside, let's call it above sort of 720, like a solid close out there above this little wick over here, I'd say there's a chance that this could have just been a deep pullback in that before a sort of spring load back up to this 727. If we see a run on DXY and US dollar across the board, then obviously that's our sort of top end target for it all. But if we sort of if we reject down, particularly early week, if we sort of reject back down from this sort of like 7 1940 kind of area, as it is rejecting here, which was seen previously, and as I said, it was our breakout level. If we jump onto the 4 hours, the top of that triangle as well, as you see, that little sort of really was a breakout pop, and then it tried to think about it coming back in, and then all the way down here. So it has had this little sort of recovery channel, seems to have sort of just hasn't broken down out of it, but it certainly lost its upward momentum. So for me, if we can sort of get down underneath this little zone that we've got here on the 4 hour, so let's call it sort of back down under sort of 7176, I think that this would sort of just pop us back into our range, and we can just look for a little bit more of the great China grind before we sort of get a swing out. And particularly because this is quite a large push out to the top side, it could just be the sort of the counter of this move down here. But potentially we could be seeing, if we do see, USD sell off this week, if we have those sort of the right sort of corresponding data, we could be sort of seeing some move coming to the bottom side and pushing it down over here as well, particularly after failed breakouts. That's generally sort of, better to stay in the grind, the sideways, and break out and hold it, even if it's a little bit later, than to try and break out and then fail. Because once you get that failed breakout, then generally you see a pretty strong sell down, as we did see afterwards there. But yeah, for now, I'll sort of be watching early week to sort of see if we can get above this sort of 1940 area, a close up above sort of 720 to sort of say we're moving back up. But I think we will kind of just sort of come back up over. Look, hold on. Yeah, I think we'll come back up over here and then sort of break back down to 716. So that's what I'm looking for there. All right, cool. And that's about it for me.